book that I wrote, published recently, was entitled Internal Control of Fixed Assets. And internal control is a very critical element. The Sarbanes-Oxley rules, the Foreign Corrupt Practices Act, both require periodic determination that the assets that are on your balance sheet are in fact there. Internal control therefore means a periodic inventory of your fixed assets. There are two ways to take such an inventory. The first is to take a printout of your fixed assets and try and find the assets wherever they are. Presumably the fixed asset record will have a location, and you go to that location. The alternative way is to go and look at the assets in a particular location, record a description of those assets, and then try and find them in the fixed asset register. So you either go from the fixed asset register to the floor, or you go from the floor to the fixed asset. If you have a reasonably good fixed asset record with accurate descriptions and faith that most of the assets are there, you're better off going from the fixed asset record printout to the floor. If you have a barcode system, you can take the barcode reader and try and identify the assets. If you have not had a barcode system and your record is not very good, it may pay you to, in effect, start over again and determine what are the assets that are there and, in effect, recreate the fixed asset register. You probably are going to end up with less line items than you have now, but you're going to be able to do the current fair market value if you really do a complete physical inventory. Again, using, as I recommend, a pretty high cutoff point, $2,500 or $5,000 for the minimum capitalization level. If you create a new fixed asset record system with what's actually out there and can estimate the fair market value of the assets, you're going to create a new register that can be approximately the same dollar amount as the old one, even though there are major errors in the old record. So in terms of the initial setup, whichever is easiest, record to assets or asset to records, we recommend. If you then have a barcode identification on each major piece of equipment over $2,500 or $5,000, you can then take that inventory once every year or once every 2 years and make any necessary adjustments. The reason that fixed asset records get out of whack, the record doesn't reflect what's actually there, is that a lot of managers do not follow the company's rules for reporting asset acquisitions, to transfers and deletions. The paperwork requirements to maintain a fixed asset system are relatively simple if the people do the job that they're responsible for. But if a manager in a factory transfers a major piece of equipment to another factory in the company, maybe halfway around the country, and doesn't tell anybody in the accounting department that that piece of equipment is moved, then when it comes time to take the physical inventory, you won't be able to find that asset, and it'll be what's called a ghost asset. Obviously, it's offset by an asset now at a new location that isn't on the books. And this is why maintaining the integrity of the asset system through proper reporting is critical. The way that you try to motivate managers to follow the rules, to communicate asset changes, the best way to do it is to have them be responsible for the assets under their control. By this I mean that at the beginning of the year, you give each supervisor, manager, department head, director, whatever the title is, a printout and say, here are the assets that you are responsible for. We are going to take an inventory at the end of the year, and if any of the assets are missing, there will be a charge to your P&L for the missing assets. It's amazing how people suddenly get religion and start reporting the changes, particularly any assets that are transferred out, because they don't want to get charged for that on their P&L. Obviously, the same holds true that the receiving department now, if they've got the paperwork properly done, that asset will now appear on the receiving department's printout at the end of the year. It'll be there, and there'll be no missing asset. So that internal control of fixed assets requires both a good software system and discipline within the company that managers do what they're supposed to. And that can be done, it has been done. There are industries, for example, like public utilities or railroads, where the rate of return that's allowed is a function of the assets that they have, and they keep very good assets. Government contractors keep very good asset records because they're going to get reimbursed by the government for the depreciation on the assets that they have. So there are industries where good fixed asset records are just a way of life. It can be done. But for companies that don't have that kind of internal financial motivation directly, you have to create that sense of responsibility, and can be done, has been done, and requires a good software system and the discipline to enforce the rules.